Hi, thanks for joining me today. I hope the microphone's working and that you can hear me okay. I'm still working out glitches about live broadcasting on Facebook. I'm really excited about the opportunity to dig a little deeper into recent economic news and sort through what that means for buyers, sellers, investors, and anyone else who's interested. Now, just a little background. By the way, I'm going to keep this short. I know I can get a little long-winded, so my commitment is no more than 15 minutes. And there are links in the profile as well as my blog to the presentation that you'll see. Now that presentation has more links within it to the data sources. So I'm going to keep it pretty high level, but please feel free to click through and dig as deep as you want into the data. So just a little background. I started my career on Kauai. It's a gorgeous island in the Hawaiian Islands. And so I cut my teeth in this business on the market bubble and burst and know very well how painful working through a recession or a market shift can be. Now that was the perfect storm. That was a very unique situation. But there are some lessons learned that I want to share with you and some particular market segments that tend to get hurt the hardest when there's a shift. So I know if you're like me and you've been through the ups and downs from 10 years ago, when you hear people talking about a coming recession, it kind of makes you like your skin crawl and break out in hives, a little anxiety. And it's really, I want to put a sense of reality on that. So just like, forgive me for the analogy, but living near the ocean, it's like watching the currents and seeing what's coming, what's the set out there for surfers do. Now here's the thing about surfers. I was married to one, everybody on Kauai surfs. The good surfers will sit on the beach and they'll watch the ocean, even their favorite beach. They'll watch the waves, and that's what we're doing today to see where the best ride's going to be. So there are 4 critical areas that we're going to touch on. One is for buyers. If the recession hits, does it still make sense to buy? You know, what they're talking about is 2020. One is for sellers. And there's a little interesting twist here to say, you know, I might be thinking, especially I'm talking to you if you've been thinking about selling and you've been waiting, or you were on the market unsuccessfully, or maybe you're struggling as a for sale by owner. You know, this is a time when it's very, very important to look at what market trends are now, as well as where it could be in a year or two. The third market segment that's very, very important to touch on is the luxury market. As I said, I really learned that was what I was selling on Kauai, and I helped many luxury home owners weather through that storm in different ways. The fourth market segment is flippers and builders. Now, luxury home owners or sellers and flippers and builders usually get hit the first and the hardest when there's a shift in the market. So we'll pay close attention to what that means. So let's, if you can see the slides behind me, these are, you know, this is information that you can go through at your leisure. But there's some specific, really the net of it that I want to jump to is the good news. The home affordability, unlike 10 years ago, you'll see through the data that I'm presenting and sharing with you that more people have a stronger equity base in their homes than they did 10 years ago. Also, buyers have overall a higher credit score, and congratulations, Americans have been paying down their credit card debt. So what does that mean? That means that buyers are in a better position than they were to make a smart move in terms of buying. Now, I'm not sure how clearly you can see this, but there are a couple slides. One at, in terms of affordability of rent versus buy, and the other in terms of what it would mean to wait because the interest rates are rising. So I want you to dig through and take a look at that. Like, for instance, this is an example. If you're buying a home today at $250,000, you know, what happens if you wait because you're nervous? Well, if interest rates go where they're predicting that they will go in Q3 of next year, a year from now, that means that your interest rate would be higher, your monthly payment would be $152 more. Real estate is a long game. If you check out my August report from last week, you'll hear Leo talk about that. It's a get rich slowly game. So if you're buying a home, most of the clients I work with, they're not buying, you know, as homeowners, they're not buying to flip. As long as you're going to be in it for it's always classic real estate advice, 3, 5, 7 year time frame, you'll be good. And it'll cost you less to buy now. This is an example at $500,000 price point. The difference would be $304 a month. So what we want to do is look at some critical information that impacts sellers. I don't mean to gloss over with buyers. We can dig deeper on that one-on-one. Now, there's some interesting data. I've pulled here national data as well as some local data. Pennsylvania, this is the same story you've been hearing. Inventory is low. Our average days on market have actually improved. Our average days on market are strong. Not as strongest in the country, but Philly's a little different than the whole state of Pennsylvania. We're even stronger in Philly. I typically average getting my clients home under contract within 30 days, but you can see 31 to 45 days is our typical time frame. The changes in prices. So prices are up, inventory is down, and I want to jump ahead to a couple things since we're talking about inventory. This is a slide showing seller traffic, so think about it. Our inventory is low, our seller traffic is weak, and yet, let me jump ahead, buyer demand is high. So we're actually very strong. So what does that mean? We're weak in the seller market, demand is high, credit is strong, and buyer traffic is strong. So if you've thought about selling, this comes down to don't be scared about the economic news. In fact, there's critical data here to say now is the time to sell. Let's look at this. We look at foot traffic. When I meet with my seller clients one-on-one, we look at the historical data. We look at the last 6 months of sales, but more importantly then we look at foot traffic now in 30, 90 days. Where are buyers looking based on the number of showings in the price points that we're considering listing? Because we want to make sure that you interact successfully with the buyer activity on the market. So here, this is national statistics. Real interesting point. If you look at where we were in 2017, October had a tremendous amount of buyer activity. So contrary to kind of that old wives' tale that summer's only time to sell, actually right now is a critical time to go ahead and get your property on the market. We can drill it into Philly. We're looking at foot traffic in Philly. So this kind of segues into the luxury conversation. We'll look at what happens with the luxury market. In Philly, you can see the highest foot traffic is the 100 to 300,000 price range. That's not unexpected. Now I want to look specifically at the luxury market above $1 million, and we'll see there's a real sweet spot between $1 million and $1.5 million. Above that, it drops off considerably. This is the past 90 days. So the reason I say this is I talk to clients on the main line as well as in Philly whose price point is above $1 million. Now, if your home did not sell and you're planning to hold it for 10 years, it works for you as a family, great. But if you're holding on to it or you're not on the market out of frustration, we definitely need to talk. Because of the shifts happening or coming, no one knows until after the fact when it actually will hit us. And because of the buyer demand being strongest in this price point, for instance, we need to carefully analyze what's going on in your specific market, what's happening with buyer activity, what happened when it was on the market. It perhaps just did not connect correctly through the marketing and pricing. And if it makes sense for you to sell, if your goal is to not be in the property, please call me right away, because all of the indicators are now is the best time to sell. Let's get it on the market before the October foot traffic and price it appropriately. And even if you're upside down on the values, please know I can get it done for you. I helped many luxury homeowners in the mortgage crisis get out from under their property when they had bad debt on the property and really needed to get out from under, couldn't weather through the changes because of whatever personal situation. Short sales are not just for people in financial distress. It can be a strategic move to get out from under a property that no longer fits with the market value. And that's the case in some situations on the main line, for instance. So don't be shy to call me. You know, I went through it myself in the mortgage crisis, Everybody, has a backstory. I'd be happy to share mine with you. I've seen the best of times and worst of times. But more importantly, for the luxury market, you want to get ahead of this. When there's a market shift, it hits the above $1 million first and hardest, and that's where the market pretty much just disappears or gets very, very soft, and it's hard because there's few buyers in that segment and very, very competitive. Okay, so let's get ahead of the competition. Let's get ahead of the shift and get you on a path to success. So as I mentioned, you can look through this. Interest rates are going up. And we've heard that, we heard talk of a recession in 2012. We heard talk in 2016. So it might be easy to kind of get into a mindset that, it's not going to happen. Philly's a strong market. Now, I personally believe Philly will weather through shifts. Just as Philly did well. I was really impressed coming from Hawaii because Philly didn't bubble too bad and it didn't burst too bad in the worst of times. So there's some truth to that. However, for those people who are hurt with shifts, that doesn't take away the pain, and we want to be very strategic. So this is not about scaring you, but informing you and supporting you so that we can make strategic decisions. The next topic is very important. I'm meeting with several people who are starting to get into flipping properties. This is where I have probably one of my biggest concerns, the luxury market and the flippers and maybe the builders. Because we already talked about luxury, but builders and flippers are basing their business model on past sales, which is fine. We look at ARV, we look at past 6 months, but when things start to shift, they shift quickly. And we have kind of a trifecta: interest rates changing, economy changing, buyer behavior changing. And if that happens in the middle of your build out, whether it's a rehab or new construction, you could get caught short to where that profit margin we had on paper from the past analysis can virtually disappear. So it's very important that we work strategically together. There has been some great success of flipping in Philly to some degree. It's kind of like you say, a wave has come into shore. So if you're trying to catch a wave that hit already, that's not going to work. But we can still maximize on the great potential in Philly. My simple suggestion is to do as many institutional investors are doing and invest in rental properties. So I just met with a client of mine yesterday. We're starting to work together on many of his rehabs, and that's my advice to him, is we need to make sure that it can work for him financially as a rental or as a sale. And that way, if there's a shift, you can benefit from the stronger rental market and the rental increases that are predicted. And again, go back to last week's report and you can see that. But if it's good for a sale, you're good either way. So if you want more examples of how that works, please hit me up. I'll show you some real live examples. So we've touched on all the key issues: flippers and builders, buyers, sellers, luxury market, and timing. Again, no one knows when a shift happens. I'm not here to make you fearful, but to empower you to plan for success and make sure that we have our A and B plan tied together so that you're not hit by surprise if and when something happens. Cycles in real estate are natural. It's not a crisis. Now, what happened 10 years ago, we could talk about forever. Wall Street was involved in that. What we see coming is more of just a natural shift in the market, that as long as you're not over leveraged, as long as you're not caught in a situation where you absolutely have to sell at this point at that price, and you can adjust and either rent it out or do some other strategic moves, you'll be fine. All right, look forward to catching up with you. Thanks for joining me. I hope you brought your lunch. And I'm going to experiment with technology maybe for this type of discussion, do a webinar. Look forward to your feedback. Let me know if you prefer Facebook Live or webinar. And until next time, have a great weekend. Thank you.